Hey, Saturday. Today we're going to be talking about John Deere, and I'm going to actually do a full review of most of the farming companies in the S&P 500. I might combine a few of them, but we're going into planting season. And as relates to macroeconomic stuff, this farming stuff is going to get really important, so important because well, if you look at CPI, you're gonna see one of the bigger components is the food element, and also is questionably under control. So I will be today going through how did John Deere do on the quarter, and then we're going to talk a little bit about um, the macro so that we can place all of this within John Deere. And all along, I'm gonna try to give a little tidbits here and there of what was the macroeconomic stuff that came out of the call that can be used for other places within the economy as you're trying to figure out who's telling the truth and who's not. And I will say this market, more than any other time that I've ever been in it, no one knows. I mean, there's a lot of folks that are paid to sound very smart and very convicted. But the fact is, I'm sure that every single very convicted person on the television that's telling you what they think will happen, if you get them alone where you can get them out of their ego space, they'll tell you that it's all, because this is not a normal market. But food is going to start being a big component of it if we continue to do a set of geopolitics that, well, it'll definitely create an exciting market. Let's get into it. Past performance, not indicative of future returns. I do not have a position in John Deere. I have most ridiculous small position in Mosaic. That's my only position in farming, and it's very recent. But I'll talk about that when I do a video on Mosaic. Tampa girl, I got to support the Florida companies. So that kind of is what it is. But we'll talk about that when we actually talk about Mosaic. Today, we're talking about Deere. And Deere reported a phenomenal quarter, but nonetheless ended the day red. Some of that could have been trading, but regardless, we're going to go through it. I would also mention for those of you who truly don't know anything about John Deere, and I get it. There's a lot of city folk that watch me, but I think most people live out most people have a little bit more farming knowledge, but maybe not. Okay, John Deere really has, they really have, a few different businesses. They've got production precision ag sales. That's big farming. Then they've got small ag and turf sales. That's smaller farms. Then they got construction and forestry, which is the forestry business and the construction business jammed together. And then they have financial services revenue, which is their financing arm so that people can buy their big equipment. Okay. And so let's take a look at the numbers really quick. Here's what they did. Revenue up 30%. Okay. And it's really fair and square number. I mean, people are buying this farm equipment. Why are they buying this farm equipment? Because farmers have been making money. Thank goodness, quite frankly, because the one thing with food inflation is that it does allow for pricing to be in a place where the farmer can make money. And that's a big deal across the entire farming complex, with the exception to where the commodities market takes the price of something into crazy land. And the fertilizer companies have absolutely also made money. It's just that they trade in a different world in a different way, but that's a different episode. Okay, now, did they bring all that 30% down to the bottom line? Yes, they did bring it. All the way down. And I want you to really see this interest expense. That's the degree to which they are not cheating, right? Because interest expense went from 187 to 569. These guys have some debt, but they're not in any meaningful, they got plenty of cash. They're fine. Okay. So even despite this big jump in interest expense, they did just fine because other areas made up for it, namely cost of goods sold. So your steel price, which everyone tries to pretend didn't go down, but in fact, yes, it did, went down. Now, additionally, something that's a little funky in this quarter is some folks got a little suspicious because the inventory numbers went up, but I think that is completely wrong, and management absolutely did address it. Inventory is still within 10% of what it was historically. Now, I wish they would have thrown a third year on here when they showed it in the balance sheet, but they did not. But if you go back and check back to 2019 and then actually give them the growth rate that they've had, you'll see that relative to the sales they're doing, they're still at 10% short of what they would prefer to be, so that people don't have to wait for their tractors, because it's farming. There's only so long a person can wait. Okay, they kind of need to use it. So that's what's going on there. But otherwise, completely spotless. Here's the mix. Okay, if you look at it, every single part of their business did great. But I want you to really, really, I should have put a little box on this so you can see it, so you can see it even cleaner. So I'll do that. I really want you to look at what's going on in production precision ag versus small ag and turf net sales. Okay. You see how both of them are going up. And that's great, because it means the small farmer is still making money. But what you need to understand there is that the small farmer ran out of money to buy excessively equipment. And that's despite the fact that in a lot of ways they kind of need to do it, because we've got some other macro factors that are coming into play here, which I'll go through, namely immigration. So I'm going to show you those numbers at the very end so you can see why this really, what's going on right now in the way of geopolitics, is messing with agriculture. Big pharma, however, is able to go ahead and start compensating that by buying equipment that will reduce their labor cost. And that's what's going on right here. And that's what's helping John Deere do exceptionally through this entire period of time. So I really wanted you to see that. Other revenues is really just a bunch of different things that they've bought over the course of years and made it work. And so there it is. But the mix of it is outstanding. Up 30% makes them one of the best revenue performers year over year. And like I said, this isn't cheating, because they've had 2 fantastic years of revenue, whereas some of the others, that 30% is up from something that was weak to begin with. So this is a solid quarter, and they brought every single bit of it. You can see the profitability down through operating profit on production and precision ag in particular, because the big ag has basically decided it's going to solve this problem by buying machines so that they don't have to be so dependent on the geopolitics, to allow immigration to not be, look, I'm not going to take a political view, but we may have overshot just a touch. And I'll show you those numbers and you can decide for yourself. But that is a significant uptick. Now, the other thing that's helping all of this operating profit is the fact that raw material costs have gone down, and remember, one of the most interesting things they talked about on the call, the technology going into farming is not, I know people think this isn't high tech or anything, but it in fact is, because self-driving vehicles, you think that matters. You think that matters in just driving down the road, but it matters a lot in farming too, because you look at the condition, there's no road, right? So if you have sandstorms and all kinds of stuff happening out in the Midwest, like we're seeing, it's a problem. Exactly, Dr. QQ, I'm seeing you. I'll acknowledge you too. GC got you crazy. I just looked at these comments. Y'all are silly, but I love it. Make sure that you guys have the comments open, because I love these posts that you guys put on there. But yeah, AI is actually a big thing in farming, and they're using it to try to improve production. So that is a real thing. And just so you don't have any kind of concerns, I did put this on here, that the other revenue part is just part of the acquisitions. There was the joint venture deal that they did with Hitachi for the construction business. And so this is just it flowing through the various statements. But as you can see, it's a big fat nothing to them, because they made money hand over fist over the quarter. So this is a good, beautiful, spotless, pristine income statement. We have a really solid balance sheet as well. Yes, they've got long-term borrowings. There's nothing wrong with the rates on that. And because their operating margins are expanding, we don't have any kind of concerns. Plus, we got plenty of cash. Inventory, I highlighted for you. Now, let's see the other things. The one thing that we need to start looking at with the John Deere, let me delete this, is you have to start looking at the entirety of what's going on in the financing business. And right now it's fine. And in fact, it's fine for a couple different reasons. It's fine because they got plenty of cash, and it's fine because bank balance sheets have to get rid of they do have to decrease what they have on balance sheet, but mostly they also have to decrease and diversify. And by far, the thing they got to jettison is mortgages. It's not construction and ag equipment. So right this minute, this whole banking nonsense that we've been going through isn't affecting Deere. They talked about it on the call, and I believe them because I'm seeing it in the banking numbers. Okay, that's why I believe them. I don't believe them just because I believe them. All right. So right now we're okay, and also because the farmer's doing just fine because of the nature of how inflation is played out, which I'll show you. Um, these are very low credit losses, whereas in past historic times this would have been a problem area. Nonetheless, we got to monitor it because when credit seizes up, if we have any other continued incidences in banking, then we got to then we got to be worried. But right this minute, we don't have to be worried about the financing business. If anything, my guess is that if for some reason the banks didn't want to finance this because of what's happening in food right this minute, the asset managers would come in and take that financing. So I'm not concerned on Deere on that, but we want to watch it just in case. All right. Other stuff that I wanted to show you. Let me see if I got anything else. This is what they told us was going on. Again, I already highlighted this big ag versus large ag versus small ag. European ag is up a touch. Asia ag down moderately was interesting to me. If you guys think that Deere doesn't sell to China, it sure does. Okay. So right now, for whatever reason, China has is still coming out of it a little bit. Out of it, it's been a little bit slower to wake up than what people thought. So that Asia ag being a little bit weak is strange. South America, this is the most interesting thing. And that kind of starts me segueing into rates. Okay. Because rates affects this company in a couple different ways. The first way that rates affects companies is the farmer, him or herself, because they have all different types of debt. But the major form of debt that they have is mortgage debt, and that's already termed out for most farmers. I don't know that the farmer, especially given 3 great crop years, wasn't by and large clever enough to term out that debt to a 30-year fixed if they could. So that's the first way rates affect. So right now, not a problem. The second way that rates affect farmers is so fascinating. The second way, the second more obvious way, is if they have to buy equipment, they're probably going to finance it and then use it, to till the field and do whatever it is they need to do to make money. Same thing with construction, same thing with forestry. So that'll be financed and then they'll make money and then they'll pay it. Okay, super cool. The third way, which is a little unexpected, is that indirectly our rates and the inflation that we're experiencing is absolutely 100% affecting Latin America. And so John Deere's big international company. And the thing that I thought was fascinating was what they were saying. A lot of countries or different farmers in Latin America, even though they're doing just fine as far as being able to sell product, are waiting for their government subsidies. So that's where it gets a little dicey if we continue on with this geopolitical stuff. So that's something I'm going to be watching for, but we're just starting to see the first flecks of it, so to speak. And from what Deere has been investigating, and they have a fantastic macro team, really, truly, they do. They're thinking that will clear itself up fairly quickly. Nonetheless, this could be something that we'll be dealing with, over and over again. Now, they are fairly, now then it comes down to, so that's it on rates. Couple other things that come out on the macro side that's just crazy interesting is, I wanted to show this. It is this big farm versus small farm situation. And this is where immigration policy gets interesting. I know everybody's got views on this. I'm not trying to tell you what view to have, but it sure does affect farming. Okay. These are the numbers. They're stale numbers. I know that to be the case. I was trying to find newer numbers, but I'm one girl doing the best I can. So, it is what it is. But if you look at these numbers, you can see how much the United States depends on workers. Let's just call them workers. Some of them are documented, some of them are undocumented. You can see the percentages here. I'm sure there's a newer statistic, but I'm sure that the numbers probably haven't changed too dramatically. And you can see which states in particular hurt the most when we can't get this stuff sorted out. And so that unfortunately affects both the small and large farmer, but the large farmer is going to take care of it by buying equipment, and the small farmers are just going to do the best they can, which I think creates disparity if we can't ultimately sort this problem out. Okay, what else? I also did want to mention we've had a little bit of luck, and this is the things that they said. And the fact is We're in the month of May. No one knows. And that's what I love about this one channel that I watch very regularly. It's called Farm Journal. They've been around for, I think, 40 years broadcasting, but now they broadcast on YouTube. Anytime they bring on an expert and they try to get them, hey, the USDA is saying the crop's going to be fantastic. What do you think? They're like, well, because country folkers are we're honest, right? I don't know how to say it. So they're like, look, the soybeans got planted early, but corn did not get planted early because we got a mess of weather. Only Mother Nature knows that this crop is going to be okay, and we're in the month of May, so we don't know. And so could we have a good soy crop? Yeah, beans only have a certain kind of season. You can see what's going on right away. We're certainly not going to have an early corn crop, let's call it that, because people planted it so late. And that's not great. But ubiquitously, whether it was John Deere or literally anyone else, the one area where you're going to see weakness is going to be in specifically beef, but potentially pork. But really, I think it's beef. And that has to do with what we saw in CPI all last year, which we've been talking about. In CPI, let me show you what I'm seeing, because here's the thing. CPI right now, let me use that as a segue. CPI, here's your CPI. Hopefully y'all can see that. I know it's really small, but I can't help it. I wish they'd print the numbers bigger. You get all that space. Print it bigger for me, if you would. Food is up 7.7%. It's one of the bigger components of CPI that's going up. Okay. But it's gotten flat for these last 2 years. And why did it get flat? Because Latin America did a good job with their harvest. Simple as that. And also, it's because we brought a lot of animals to slaughter. And that has a very interesting dynamic. Let me show you this. You can see this CPI. A lot of people just report the headline, but you'd be really shocked how much detail CPI goes into. And I do look through it. All right, just in case you're wondering. Every month it comes out, I look through the entirety of CPI, looking for what looks weird. And this one stuck out to me all of last year, and that was the price of specifically meat going down. And yet you could see dairy. Here's sorry, let me show it to you. This is the year over year number, and this is what happened on the month, and then this is what the seasonally adjusted numbers were. And I apologize, I pulled the wrong thing. You can usually see it every single month, but if you saw it every single month last year, that 2.8% number versus cereals and baked products, that's animals going to slaughter and the grain prices still continuing upwards. Okay. And then this, in case you were confused as to what exactly was going to slaughter, dairy and related. So of course it's cow price, because some people even brought dairy cows to take the grain price to feed them went up. So that's what's good. That's why I posted on Twitter for some of you guys that the whole dynamic in ag is interesting. And it's going to be real touch and go through this planting season and harvest season, September for North America. And depending on the crop, I mean, some of y'all know June, whatever might be certain crops, but yeah, so it's going to be interesting. If there was anything that someone who doesn't care about agriculture at all or the stock market should know, it's if you like beef, you like hamburger, if you see a sale, go ahead and put it in your freezer, because we don't know how it's going to end up. And you can also watch the live cattle prices as well. It's a little bit stale, but you can check out the ETF. I unfortunately didn't look it up for you in advance, but you can go into Yahoo Finance and type in live cattle, and it should give you some tracker ETF that's associated with it. But the live cattle price has been shooting up. It's the only commodity that's been acting exactly like what you'd think the dynamics should be. So that dynamic is for reals. And then the two other little things that I would mention, the crazy thing about this meat price, bringing them to slaughter in America, we supplemented some of this increase in grain pricing with cheap meat. Overseas, they didn't have that benefit because we are blessed with the beautiful land that we have here where we can grow stuff and farm animals. Not everybody has that. So in other countries where that wasn't the case, they suffered hard, even worse than we did on food inflation. Okay. So that's something to just be aware of. I think that's all I have. Oh, the other thing that's interesting, it has to do with the gas price that we got to watch. Now, thus far, gas has been whatever it's been. However, because we've been releasing. Oh my goodness, I didn't put it on here. I'll just say it then. The ethanol price, biofuels, that price has gone down a lot because nat gas has gone down a lot. But thus far, it's been like the spring months, and we got really lucky in the winter with some nice calm weather. If Mother Nature can just work with us through the summer, and we don't have these crazy heat spikes, then it might be okay. But if not, we'll just have to see. That said, biofuel has been doing well, but then our corn planting has been late, so it's going to be very interesting through this summer. It's going to be a wild ride. Okay, that's all I have. I don't know if there is any. Let's look at the questions. All right, start from the top. Juicy got you crazy. This is not a tiara. It's just a headband. I'm doing boho today. Thank you for noticing. Do I think this is part of the Great Reset? I'm not sure what you're referring to. Give me a little more detail, Quadomo. Hopefully I'm saying your name correctly. I think I answered this one. Dr. QQ, let me know if I did not. Oh, that's so amazing. Feel free to post whatever I got wrong down below. If you're a farmer, if I understood you correctly. I don't know. All right. And then would I recommend buying land and becoming an independent farmer, support the local community? Let me tell you something. Farming's hard work. Okay. Farming is really serious hard work. I have not done it, but it turns out my mother has, and my stepfather came from a family of farmers, and it is hard work. Okay. If you enjoy doing it, then I love it. Then absolutely do it. But if you want to have a little garden in your backyard, that might be a little easier. And I do think that having a little garden in your backyard is going to be a smart thing for anyone. It's just smart if you can to do it. It teaches you a little bit about the economics of farming. It's nice to have fresh foods and vegetables. And every single time we have a grain shortage, which we're trying to come out of a 2-year lowest levels ever of all time period. But every time you'll see the farmer plant one set of crops at the expense of other sets of crops, and so you may not get the foods that you want. So it's always good to do that. It's definitely good to support the local farming community. There's nothing better than that. And in fact, some of y'all who are like, "What do you mean by meat?" You can actually buy a full cow. It's actually, if you've got a family now, I'm just, you could buy a quarter cow, half cow. Just you can go online these days and find people that already have their setup so that they can do it. But you might also be able to just drive out to where you see farming country and work it out that way too. But you are going to have to do all the other parts of it, because it's not just raising the cow. You got to bring it to slaughter and do all that good stuff too. So it's not a bad call. It ends up being much cheaper, especially if you got any kind of size family. Your economic, if you can afford to do it, it makes sense. Do I still like AMC? Right this minute, I am not changing my position on AMC. I think that I'm going to hold it for some time. It's a little scary right now, because if you can't get past this, if you can't get it, like, we need to see this lawsuit resolve itself, because even though it's going to be very, very tight, I was talking with Tony DeNaro this morning, because he's just really, really smart. And I've had some family issues that have taken me away from looking at things the way that I usually do. But working capital, but we were having a little discussion. Working capital is going to be really tight, although revenue should look a little bit better. But I need to see them make money, and I believe they will. Let me say it that way. But in my dream world, we'd resolve this issue. And I'm actually not opposed. I would not be as upset as maybe some people would if they did a capital raise just to shore up the balance sheet. And if they didn't need the capital, they could always buy back debt that everybody wants to trade down to 30 cents on the dollar, or buy back stock. I'd be cool with either one, honestly, just to make this balance sheet short sellers nonsense go away. So that's kind of how I feel about that. Hopefully that answers the question. Tony is great. He seems like a really good human being, although I don't know very much about him. But thus far, I've had nothing but exceptional interactions with him. And then let's see what else we got. All right, I think that's it. It is Saturday. You guys have a great day. Spend time with your family and loved ones.